I will now leave the floor to Mr. Ellis from Moody's Investor Service. And as we know, Bulgaria enters the crisis in a relatively strong fiscal position, but I will leave you maybe to elaborate more on this and to give you an overview of Bulgaria's economic and fiscal outlook and the challenges ahead from a credit agency perspective, maybe. Thank you.
Thank you very much indeed, Agnesi, and good morning, everybody. It's lovely to be with you, albeit virtually. I think I agree very much with the kind of broad perspective that Mr. Zarconi just set out in terms of the impact of the pandemic on the kind of short to medium term. But I think for us as a rating agency, one of the things we've tried to do over the past year is deliberately take a very measured approach in our assessment of the pandemic on creditworthiness. And essentially that's been because we do think this is likely to be a recession unlike any others. The fall off in activity, particularly in the second quarter of last year, as numerous economies put in place severe restrictions to contain pandemics, was frankly unprecedented in its size and coordination across lots of different countries. But we ultimately think it's likely to be a temporary shock. And in a global context in particular, it could even be a smaller shock over the medium term than we saw after the global financial crisis. If you look at forecasts for global growth before and after the financial crisis and before and after the COVID pandemic hit, actually the medium term impact of this COVID pandemic is likely to be smaller on a global basis. And that's why, by and large, our rating actions last year were not swaves and swaves of downgrades. Yes, we took downgrades because many companies were suddenly in very difficult situations where they literally weren't allowed to put their customers in restaurants or on cruise ships. But for lots of credits, we didn't actually make rating adjustments at all. And one important group there is in the sovereign sphere. We know that sovereigns have taken on more debt to deal with the pandemic, but actually the interest rate they're likely to pay on that debt this year is probably going to be lower than previously expected for many of those advanced economies. And that speaks to the offset between the stock position, where you have higher debt, and the flow position, where the affordability of that debt is actually, if anything, actually a little bit better this year than was previously thought before the pandemic. And that brings me to Bulgaria in particular, because Bulgaria is one of those economies where we haven't downgraded, in fact, quite the opposite. And we do see some clear credit strengths supporting our rating for Bulgaria, which at the moment, just to remind you all, is a Baa1 rating with a stable outlook. First and foremost, Bulgaria has very low general government debt. Its debt to GDP ratio is one of the lowest in our advanced economy universe, or even in our global universe. And it does have some institutional arrangements that very much support the credit profile. In particular, the commitment to the currency board arrangement and that plan to join the euro eventually. That accession process is helping to anchor policy. And that's really quite important from a credit and investor perspective, because it provides a bit of predictability about policy choices. There are challenges, of course, and Mr. Zarconi mentioned some of those in his talk. I think I'd agree with pretty much all of them. The ones that we highlight tends to be things like the demographic profile, the aging structure of the population. There are some large and frankly quite unprofitable state-owned enterprises in the country. But there are also the institutional challenges linked to the rule of law, governance and corruption that I'm sure we're all familiar with. And really, if we weren't going to highlight one or two things that we think would boost Bulgaria's credit standing, it is that fundamental improvement in the quality of executive institutions, the fight against corruption, improving the efficiency of public spending, and secondly, a clear and sustained plan for better infrastructure. Bulgaria is still a relatively middle-income country, certainly compared with some European peers at the moment, and we do think there is significant scope that a targeted infrastructure plan could both boost economic prospects and raise incomes over the medium term. That was our position before the pandemic, of course, and now we do have the European Union putting significant funds into a number of member states under the RRF and the SURE programs. Bulgaria actually stands to be one of the biggest gross beneficiaries relative to GDP, if not the biggest, in terms of the funds that are available. And that's really quite encouraging, particularly from an investment perspective. Now, sure, in the RRF, unlike, say, some of the fiscal support schemes elsewhere, like the US and the UK, they're actually relatively well designed to provide income over a number of years. So it's not like you get a lump of money in 2021 and then suddenly you've got to spend it all. There are going to be disbursements throughout the next 3 or 4 years. And that should, again, support the kind of slightly longer term planning and thinking process behind how that money is spent and how it can help develop infrastructure. At the same time, I think we do have one particular concern about Bulgaria, which is given the upcoming elections, it's possible that its submission to the Commission on how it's going to spend those funds might be a little bit delayed. But it definitely has the potential to be one of the EU countries that is most transformed by these funds that will now be made available. And that really does give us some cause for optimism. We have to temper it a little bit because, as I mentioned earlier, there are two things we'd focus on: infrastructure and the kind of governance and rule of law aspect. And that second one, you don't necessarily need money to deal with that, but it's very important from our perspective when you look at, say, A-rated peers, so countries that we rate slightly higher than Bulgaria. That gap in terms of the executive governance function is very important. But it's also just worth noting that we have recognized Bulgaria's strengths even over the past year. So in the middle of the pandemic, when lots of people were worried about rating downgrades, Bulgaria was one of the sovereigns that we actually upgraded last year. So we moved the rating from Baa2 to Baa1. We did that in October after we knew just how bad the pandemic, well, we broadly got the sense that the pandemic was going to be a pretty terrible event for everybody. And that reflected those fundamental credit strengths that I talked about earlier. So I think we do see the potential for these funds to be more transformational here, perhaps, than elsewhere. But purely from a credit perspective, we probably also need to see reforms aimed at increasing the efficiency of public spending, dealing with some of the executive governance and corruption issues that we can happily come on to talk about. So there's a lot of uncertainty about the near-term outlook. Mr. Zarkoni was absolutely right. We've tried to look through that wherever we can in terms of our ratings. We've tried to focus on the medium term. And the thing I would say is I think Bulgaria's future, given its prospects, given the funds it's going to have available to it, it might arguably be more firmly in its own hands than for some other sovereigns, which, frankly, we haven't seen the same resilience and credit strength that we recognized last year with the upgrade. So that's it for me in terms of my opening remarks. Thank you very much, Agnes.